Hello, you're watching Dukascopy TV. I'm Ben Jones. ZEW data for Germany has been released today, with manufacturing PMI coming up later on in the week. Joining me on the line to discuss and analyse this data is Timo Klein, Senior Economist at IHS Economics. Firstly, Timo, if I can get your initial reaction to the ZEW data that has come out today. Last month we saw the forecast at its highest since April 2006. This release has seen a drop from 62.0 to 61.7, whereas many were predicting a further increase. The result is still optimistic, but what is this slight drop down to in your opinion?
Well, the ZEW data is it's a relatively volatile series. It's a survey of some, I think, 300 financial market participants mostly. And one should not read too much into the meaning of one single month at the data edge. So even though I also expected a somewhat moderate further increase, I would just say that the fact that we saw this marginal decline in January is just a stabilization at a very high level, keeping in mind that this level, 61.7, is already fairly close to cyclical and especially even all-time highs. I mean, all-time highs were somewhat above 85 or so. And as this indicator can range between minus 100 and plus 100, we are relatively close to the top. And secondly, the fact that at the same time, the other and not quite so much observed index, the current conditions index, made a sizable jump, almost 9 points. This just shows that sort of the hard data on the ground is starting to catch up with expectations.
So, German ZEW data is not as positive as initially predicted, but data for the Eurozone has surpassed expectations, hitting 73.3. If not Germany, where is this additional optimism coming from, and what will be key for Germany over the next few months?
Well, the fact is that over the last 2 to 3 years, one should say, but especially also in 2013 already, the German economy certainly outperformed the Eurozone average due to the problems that have beset, especially the southern European countries, due to the overall debt crisis especially. With the stabilization in sort of brought about by measures from the European Central Bank, but partly also European governments, as of, let's say, the second half of 2012, there has been sort of a gradual stabilization of expectations, and now, indeed, more and more, also an improvement in terms of the hard data in the Eurozone as a whole, and especially also in some of the problem countries, especially I would mention Spain and Portugal, Ireland, of course, as well. So this has helped the Eurozone as a whole, and the gap between the current conditions as seen in Germany at the moment and that in the Eurozone is that gap is still very wide, but it will surely narrow during the coming months, and that in turn will then be also an additional support for German exports. So it's even good news for the German economy that Eurozone prospects are now improving.
And finally, looking later into the week, flash manufacturing PMI for Germany is being released on Thursday. What do you see happening here, and how do you think this will affect the German economy?
Also an upswing in these PMI series in recent months, especially now in the last few months. This has been a noticeable pickup, also with regard to some subcomponents like export orders and such. And the expectation is that there will be some further improvement also now in the January PMI data shortly. Although, again, I would also not rule out that this also shows this kind of stabilization as seen with the ZEW data. But then, again, the levels in the PMI are not as high yet as in historical perspective as the ZEW data are. So they will likely show some further improvement. And yes, and that indeed bodes well for the growth outlook in 2014 for Germany. We are expecting now roughly about 2% growth compared to only 0.5% growth in 2013. And although some of that is due to the fact that we had very large dip in late 2012, which subdued the average for 2013, one can also say that in underlying terms, growth forces are becoming more stronger and also more widespread, especially as the lagging investment part, that should indeed recover quite markedly during the next 6 to 12 months.
Thank you very much for talking to us today, Timo. That's all we've got time for. Make sure you stay tuned to Dukascopy TV for more updates and exclusive interviews. But for now, goodbye.